I think it's just important for people to recognize that entrepreneurship is the direction of America that you got to go in if you're going to financially survive. Make sure you have a 10 out of 10 on your core significant other relationship, have a 10 out of 10 relationship with your health, and then have a 10 out of 10 relationship with money. And if you got all three of those simultaneously going on, that is the have it all life. It's like, hey, I figured out enough of the game of money that I also have created this balance.
Well, welcome everybody to another episode of the Main Street Influencer Interviews. And I am so excited to have a mogul in entrepreneurship and real estate with me today, Kris Krohn, who's an entrepreneur, real estate mogul, best-selling author, breakthrough mentor. I love father and husband, but best-selling author. And he's done over 6,000 real estate deals, $2 billion worth of real estate over the last 20 years, helping investors around the country. We've got a lot to talk about today. Kris, thanks for being here.
Yeah, Mark, happy to be here, brother.
No, I appreciate it. Now, I want to point out to my followers, Kris does have close to 1 million subscribers on YouTube. We got to get him his gold play button. I got my silver play button. I'm coming up on you, man. I'm going to get there. So
no, I love it. You know, it's interesting. It's like everything is TikTok, everything is Instagram, but YouTube is kind of like the specialty niche because all that short form media out there, I can reach, millions of people every day through the shorts. But YouTube is really, or podcast is where you really get to, I think, know somebody because the long form is, it does something that short can't.
It doesn't. It all leads to YouTube in the end. People are like, I really want to get the real deal. So, Well, anyway, we love what you're doing there. I'm right behind you. Well, okay. So on that note, I was perusing your last 10 to 20 videos, and I was really excited. I know we're going to talk about real estate, everybody, because any of you that know Kris know that it's just incredible, his knowledge on that. And I'm hoping he's going to reveal some of his top markets that he likes today. But before we get there, with these last 10 or 20 videos of yours, at least a third of them were just helping entrepreneurs get started. How to start a business under $5,000, how to start a business under $10,000. I'm speaking on the same topic in a couple weeks, helping people find how to deploy $5,000 in their IRA. Where do I go? What do I do? So can we brainstorm? Tell me some of your ones you love, like helping these side hustles, side gig, people get the juice and become entrepreneurs. What do you love right now?
Well, first of all, I think it's just important for people to recognize that entrepreneurship is the direction of America that you got to go in if you're going to financially survive the politics and the directionality of everything. We've got Gen Z, 94% of them want to be entrepreneurs. They're looking for freedom. They're looking for mobility. They don't want so much that corporate life. And it's weird. I think college has kind of come and went and kind of died a little bit because it's such a commoditization to have a degree. And then on top of that, you look at that over the last 20 years, wages have increased 28%, but real estate has gone up 148%. And with inflation where it's at, the bottom line is one income is not enough to live a good life. Two incomes is hardly enough to give a good life. People now need multiple streams of income, and a job just can't fulfill on that for so many people. So entrepreneurship really is the key. And some of the things that I'm loving right now, Mark, is sometimes it's as little as a side hustle. How can I just spend an hour or two a day as a solopreneur, but maybe make enough money to risk my job? Like, can I outpace my job, not just supplement it? Can I make $5,000 or $10,000 or $20,000 a month? In which case, maybe I become a full-fledged entrepreneur. I like tempting people with that. So I've got a variety of spaces that I'm doing in. What are some of the side hustles that are just hot right now in this kind of economy?
Hold on. Let me. I want to echo you because what your estimates are now is that over 50% of working Americans have a side hustle.
Yes, they have to.
And it's, you have to. But the beauty is, what I find the key is, Kris, that I love is that when people find the side hustle, it's not to buy the BMW or to go on the next big trip. If they're smart, they're using that side hustle to fund the investments, to fund the real estate so that 5-10 years from now, maybe they still have the job, but now they've got this huge passive income. And I don't know. What are your thoughts on the smart play when you have that side hustle?
First of all, I think it's important for people to recognize that either you spend money irrationally and you're impulsive. And those people, we know how the financial story always ends as a cautionary tale. But then you have the accumulators. And the accumulators, you cannot, if you're going to make $3 to $5 million in your working life, you're not going to save the $3 million that you need. If all you make is 3 to 5, how are you going to save $3 million, give it to your financial planner, and on the 4% rule, wind up with a basic $100,000 a year, like so many people dream of having, because we hit our financial stride in our mid 50s. For most people, that's making around $90,000 a year. So they dream of at least a retirement where they can, keep the same income when they're not working. And when you start doing the math and realizing that accumulation isn't really a possibility, you have to do, Mark, exactly what you're saying. You have to save money, and it's not for more accumulation, it's for investing. And investing is the only thing that'll ever set you free. And so many people are against that because they're like, well, it's risk. And I'm like, no. You don't get it. The biggest risk is doing nothing. You're going to have to take a risk to make it calculated, get financially educated. A side hustle is a great way to save up an extra $200, $300, $500 a month, or maybe a few thousand. And if you're smart, you'll put that in real estate. You'll own businesses. You can have an absentee, owner status on a business and have a business that is paying you and making you money. And this is the way that we have to transform our thinking in this country.
It is. And I'd love to say a couple of things. I want to echo what you said is like, I love the side hustle is like the gateway drug to like full-blown investing and entrepreneurship. You just get a taste of that 1099. You're like, hey, I can write things off against this. And of course, my jam is the tax write-offs and the building wealth, because a lot of times it's easier to save money than make it. Yeah. And so if we can get there, and I love this concept that the side hustle is supplementing our real wealth building. Like wealth building has to come from somewhere. And if we're not generating this extra income, it's not going to happen. We've got to embrace it. It's okay. Don't be stressed out about it. Okay, so without further ado, I want to brainstorm here because I've got my favorite ones too. I love it. But what do these young entrepreneurs that are finally catching the vision, what's some of the things you've seen lately that have been exciting, interesting?
Yeah, so let's do a deep dive on a small niche. You have a percentage of the workforce that doesn't use the internet. They don't know how. And that's the construction field. So you have all these handymen and you have all these construction workers, and they don't know how to promote their business online. And yet online is where we go to find contractors. Yeah. So they're largely misrepresented, underrepresented. And what I do is one of my favorite little side hustles, I call it high profit hustle. And I basically say, let me give you a system for generating cheap Facebook leads for people that want expensive things like a kitchen remodel or having their basement redone. And then go find the companies that will charge tens of thousands to do those things and go take a 10% cut for giving them the job. Or maybe it's a roofing job. And so I got a lot of young entrepreneurs, older ones too. They'll spend an hour or two a day basically launching a half a dozen ads. They collect the leads through text, and then they just hand them off, broker the lead out, and should any sales take place, they basically get a 10% of what's ever collected fee. And I had a guy last year make over $1 million doing that. So it's it's a thing that, listen, whether it's making an extra $500 a month or $5,000 a month or whatever, what I think a side hustle should be is something that takes less than 1 or 2 hours a day, so that you can still keep that job and supplement the income for that investing that you're talking about.
Well, and what I've liked to, and you've said this in some of your videos, is that some of the easiest side hustles are not capital intensive. They're service based. You've talked about these smaller franchises models where I can, for less than $5,000, I can at least get a name and a brand and some training and get going. Service based businesses are so easy to get going. Yeah. I love those.
But there's also some bigger games to play out there. There's a dozen franchises right now that I think are hot. They're doing really well. They make, they have the potential to make, hundreds of thousands of dollars a year. And a lot of them within 6 or 12 months are absentee owner status. So it's like, wait a second. Most people think entrepreneurship means start a business. And the most difficult thing you'll ever do in business is start one. Instead, right now, we're in the largest wealth transfer in our history. Over the next 7 years, as the final baby boomer lays their head down to retire, they're going to let their businesses, 70% of their businesses, these trillions of dollars worth of companies, they're not going to be sold. They're not going to be brokered. They're going to say, oh, I was saving that for the next generation. My kids don't want it. They want something different. So I guess I'll do nothing. And I'm like, wait, you spent 30 years building up this, cabinet fabrication company. You've got all these SOPs, models, and systems. It's fairly automated. It makes, $300,000 a year in profit. Someone should come in and at least negotiate to take that over or do a leveraged buyout or just buy the thing. Yeah. So there's a lot of, instead of start from scratch, that's kind of why I think most people get beat up in business, is because there's a massive learning curve when you start from scratch. But if you move into an existing business or a franchise, someone else has figured out like 90% or if not 100% of that business. And it's a little bit more of a buy your way in. And, there's a way to get into some businesses for no money, but some maybe are 50,000 or maybe they're legitimately a couple $100,000. But those are also the kind of things that I like to collect because I like to collect streams of income that don't require my time.
Oh, I love it. And in fact, it's funny you bring that up because as you know, in my tax and legal space, I'm certifying enrolled agents and CPAs and accountants to provide tax coaching and tax advice as a certified tax advisor. And accounting practices are the same thing. I had a client in Texas last month go in and buy an old accounting practice from this guy that was like, just going to shut the door. Wow. And he's like, I'll give you 10 grand for your book. He's like, all right. I didn't think it was worth anything, and he just stepped into this full blown accounting practice as an enrolled agent. And I just loved it.
Yeah. That's so cool. Amazing. That stuff is out there everywhere because a lot of these people that own these businesses, they do it for money until they no longer need it. And yet their business has value. And if they ignore that, they're just going to let it go. And so I love finding those and allowing that to pass on to the next generation. And so I think entrepreneurship is going to also be more important than ever before because of AI, right? The World Economic Forum says expect 70 to 80 million job transfers or losses in America alone by 2025. And I'm using AI everywhere in my business. And I'm embracing it because I think there's good and bad in everything. And I choose to find and look for and embrace the good. It is the way the world is moving. And so I think that everyone, even if you've been in your career for 20 years, you got to stop and pause and think, wait a second, am I about to be taken over? Because by the way, accounting practices and law firms and reporters and news, these are some of the first things where transition is heavy. And you can either wield AI as your friend or you can allow it to just take you down.
I know. I love it. Now, before we get to real estate, because I love talking arbitrage, Airbnb, and lease options. I know you're a master at that. But one other thought on this entrepreneurship. What are your thoughts on doing what you love? And in fact, you've talked about how many people hate their jobs. I know. And then so maybe to share your thoughts on finding that side hustle you're passionate about.
85% of people hate what they do. And that means that the other 15% are okay with it or can tolerate it enough. The only people I feel like that should be employees are entrepreneurs, people that are caught up in a company and its vision. And hopefully that company has a profit share program or something that says, hey, if we can move towards having a great level of success, maybe an exit someday, we want to share some of that with you. But unfortunately, a lot of corporate culture and companies don't operate that way. And so, on the one hand, you have people that don't like what they do for a living. And I think that's so dangerous because if you practice every day being a complainer, if you practice every day becoming grumpier with time, eventually it's like, who cares whether you are or aren't making the kind of money that you want? If you're not enjoying your life, you're missing out on the most important part of life. Eventually the proverbial bus is going to hit you. And when it knocks you on your ass or your deathbed, can you look back on your life and love what you did with it? So for me, I think one of the most egregious sins in the world is people that will sell 40 or 60 hours a week of their soul to do something they don't love. And I'm like, all you're doing is training to hate your life. And that turns into anxiety, depression. And for some people, that even ends in suicide. So I do think it's important to find a life that you love. And either, Mark, that's find a business or a side hustle that you have passion for, or commit to become so good at the game of money that it doesn't rule your world anymore because you become passive. When I was 21 years old, I realized the stats that I'm sharing right now. And by the time I was 26, I was financially independent. I quit my job. I had just graduated college, and my entire real estate business I handed off to a friend to run, and I had nothing to do. That was one of the happiest times of my life because I had time, I had the money, and that's really the definition of what freedom is. So in that case, I didn't need passion for a thingy because what I did is I just worked hard enough over a short enough period of time on the right thing that it paid itself off. There are people, I tell you right now, that are watching this right now that have been in the accumulation mindset. Maybe they're Dave Ramseyites and they put their money in 401ks and IRAs and these vehicles and they're stashing cash there. And if all they did was rearrange some of that money to own real estate or own a business or two, they could probably make the same amount of money and buy back all or most of their time.
Yeah.
So it's, for me, the game of financial mastery is how do I rearrange resources to get to the real goal? The real goal is loving your life. That's where passion really fits in for me.
And I like how you said the business of money. And some people ask, oh, why'd you go into accounting? Well, I didn't want to be an accountant. I didn't want to be a lawyer. I just love the business a lot, the business of accounting. I think it's the lifeblood of business to know the numbers, to know the structure and all that. And when you get excited about just making money, I'm like, all right, I'll do a dump truck business. Oh, you want to do landscaping? I'm in. You want to go IT? I'm in. It's just like, where's the ROI? Let's do it, and just get excited. And the people you hang out with should enjoy talking about money. I was talking to someone the other day that's like, I was getting shunned by my friends because I was talking about success and wealth. And I'm like, you got the wrong friends, you got it.
Well, tell me about it. I own an event center here in Utah, and every quarter I have people stream in, mostly from the United States, but some of them international, and they'll come and hang with me, and they want real estate training. They want business knowledge, but my events are very experiential, and half the time is really focused on positive psychology and how to think like a millionaire and a billionaire. This last year, just one of my businesses added 9 figures to my net worth, and I own hundreds of businesses. And one of the things that I've learned is that if you want to financially be more successful, you need to learn the game of money, but you also have to learn how to be a happy human being, because there's a lot of miserable, successful people out there. And who cares to have money if you're not happy? And honestly, the bigger picture for me is it's like, make sure you have a 10 out of 10 on your core significant other relationship, have a 10 out of 10 relationship with your health, and then have a 10 out of 10 relationship with money. And if you got all 3 of those simultaneously going on, you've got it all. And that my bigger brand is Have It All. That is the Have It All life. It's like, hey, like I figured out enough of the game of money that I also have created this balance that the world says is elusive and you're too busy for it and it's impossible. I'm like, no, it's all available, but it does take some training. And I think that's a draw for some people when they come out to my events is it's like, I don't know if I'm doing it right because I'm not the happiest person. I'm not making all the money that I want. Something's got to shift.
Yeah, that's a good call. Great call. Well, we've got to get to one of your favorite topics and mine as well. In fact, I've got inspections this afternoon on 2 Airbnbs. I got 2 Airbnbs I'm taking down in Scottsdale, and we're looking at those this afternoon. And I know you love real estate. For those that don't know, again, a lot of people are like, I can do this with my own money, my IRA money. I can get into real estate. Tell us about some of these arbitrage strategies that don't take a lot of capital.
Yeah, so when I got into the game of real estate, I probably spent too much time there. Any financial planner looks at me and says, "You're so deep in real estate. You should probably, diversify a little bit."
Of course, that's going to be their answer.
I know. Well, I know. Well, we won't get on Wall Street, right? Every day I buy a property. I buy it with no money. I buy it with no credit. And frankly, I buy it with someone in the world that's watched my social media because I found out how to basically say, hey, come partner with me and I'll do 100% of the work and we'll just co-own it because I'm an expert at this very specific strategy. And here's when we talk about how does someone enter the game, it's like, well, commercial, that's got to be intimidating because usually we're talking millions of dollars. Multifamily, like buying either a 16 unit or a 600 unit, that's intimidating. That's a different level of financing and your purchase price is likely in the millions or tens of millions. So if you take a look at, in my opinion, the most profitable version of real estate, but also the most entry level, it's weird. What is most entry level for me is also the most profitable. And that is doing a short-term 5 to 7 year hold on single family properties. And what I do is I buy them below the median. My average purchase price is around $220,000. And I just bam, 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 line them up, buy them and accumulate them. And I only buy properties where I'm going to hold it, I'm going to rent it, and then in 5 years, I'm going to sell it. And I can average around, at least minimally, the goal and focus is always a 25% minimum projected annual ROI. And that's because I can outperform the stock market 27 to 1. If I just go from single digit 30-year average in the stock market to real estate's double digits, those double digits, people think more ROI has got to equal more risk. That's honestly not my experience. I'm a little bit more of the Buffett that talks about margin of safety. And I love playing the game of real estate because it gives me a ton of safety, a lot of security, but it also just makes me a lot more money. So single families, I think, Mark, one of the most accessible ways, because if you want to get in on a $220,000 house with a 20% down payment, on the low end, you're looking at $50,000. That's a lot of money for a person, But just buying one house at $50,000, growing at 25% over 20 years can turn into $4.3 million, for example. So it's like, okay, there's an end game there that lines up with my greater financial goals. And real estate can do that when many other things can't.
No, I love it. And when people catch the vision of that, it's so exciting. And what I love too, it's a hard asset.
Yeah.
Right now in today's world with the cryptocurrency, which I'm a fan of crypto, but at the same time, we've got these smaller bank issues and we've got Wall Street, who I'm not a fan of. Yeah. But real estate's a hard asset. And when you're buying under the median, what is the risk? I mean, as long as it cash flows, I'm a huge believer that we got to have at least some sort of cash flow. We don't want to be going negative. But then the real estate, you know what? Let's go there too. What's your feeling? You know, a lot of people say, well, we're in a bubble. You know, well, we're going to see this. We're going to da. And I'm not, I won't say my opinion. What gives your take?
Well, let's back up first to 2008, right? Everything leading up to that, everyone 5, 6, and 7 was making all this money. And I remember I was buying all these single family homes, and I had a couple of buddies that were buying these $1 and $2 million homes. The house within a year was worth twice as much. And they said, Krohn, you know, you have to buy 20 homes to make the kind of money I can on one of my big multi-million-dollar deals. And I said, you're right. And a year later, they lost everything. And because I bought below the median, I had something through 2008. I was screaming at the top of my lungs in 09, 010, 011, buy real estate. The media said they shut it down like they are right now. And they said, it's bad asset class. Don't do it. And I'm like, are you kidding me? Like, do you understand that Wall Street and the hedge funds are dropping $50 billion to acquire 10% of all single family homes over the next decade? They want real estate as a service. They're taking your number one money-making machine. When someone retires today, in these years, 2023, average retirement at 65 years old, $255,000. But did you know that your net worth is more than that in the real estate equity alone? If you knew that you were going to have $300,000 average in equity at retirement, you got to be thinking, shoot, if I just bought 10 homes, I'd be worth $3 million. I'd have 10 times more money than the situation I'm sitting in. So commenting about the situation that we're in, whatever the media is saying, it is most assuredly the opposite. Within 5 years of 08, I cleared $100 million in profits for my investors. And mark my words, what's happening right now, Mark? We have people are worried about a bubble that's going to pop. I'm like, do you realize that we're missing 5 million plus homes, a number growing every single day, for real estate that doesn't exist? And the only reason why prices have stopped going up is because the government only has one lever to pull against financial easement, because they've been printing. What about the $4 trillion in 2020 they printed? We've been rewarded for the last 23 months with inflation above 5%. So while the value of your dollar is drastically decreasing, there's an inverse relationship to real estate. Because it's a hard asset, it's going up in value. The moment we get serious about electing a new president, if Biden has any intelligence at all, he's going to drop rates, because he needs to actually create fans amongst the people. As rates drop, real estate is going to go through the roof. Why? Because it's a function of supply and demand, and we're not building enough real estate. So whatever argument there is out there for a bubble, number one, you're right. I don't buy multi-million-dollar real estate. I stay below the median. It keeps me safe. But I'll also tell you, the moment those rates come down, because of the shortage in real estate there is, watch what happens across the board to the prices. I think the next 5 years is probably one of the biggest money-making plays of the last 2 decades in real estate, because of the dynamics that we have right now.
Yeah, and without, you don't even have to be a conspiracy theorist to realize the media is owned by Wall Street. Yeah. And while they're trying to lull everybody into this false sense of security, they're buying. Yes. They're buying as much real estate, and they're going down to the granular level, buying single family homes. They're not just doing the big multi-units. They're buying anything they can.
Well, and single family, this next decade is going to be like the heyday for single family. The World Economic Forum, again, they envision a 2035 where no one owns real estate anymore. You don't own a car, you don't own anything. Everything is a service. And I'm like, do you realize that just from the boomer to the millennial generation by age of 40, that the average millennial has 5 times less money than the previous baby boomer generation? So we're headed in a really awful direction financially, where we're all basically being told, no, life is a service, pay for this streaming thing, pay this monthly thing, a car will come and pick you up. That's what the future looks like. You don't need to own a home anymore. And it's almost like we're putting humans like in a little ant farm so that we can control them. And we're losing our sovereignty to produce and own our own financial destiny.
Yeah, it's crazy. Well, okay, we're coming up on our time here, and I just a couple of other. I don't want to leave our group hanging, so let's get to a strategy for fun. Now I know, and folks, you've got to get over to Kris's website. We'll get all that information will be down in the description. I want Kris to be able to share that here in a moment because he's got multiple ways to help assist people that want to buy with one-on-one with Kris's team or themselves, coaching and finding property, as well as funds for accredited investors, a Reg A that's coming out later this year. I'm excited for you. So there's a spot for everyone there. But this arbitrage strategy, I mean, you just did a great little video. I love the way you explained it the other day. Just kind of break it down for people what arbitrage means, even with a short-term rental.
There was a French economist in the 1800s, J.B. Shea, and he said that creating wealth is simply the function of moving assets from low yields to high yields. So think for just a moment on what that means. Can you borrow money at 5 or 6 or 7%? Sure. And if you do, is there a place that you could put it that could earn predictably 15, 20, or 25%? That also exists. When you borrow low and then you invest at a higher rate, what you make in the middle, that margin, that's profit. And that's called a positive arbitrage. Now, conversely, if I were to borrow money on my credit card at 18%, and then put it in some really low performing asset class at 6%, the difference between 18 and 6, I would be losing 12% a year on my money. That would be a negative arbitrage. People that are good at making money, people like me, what we do is we look for positive arbitrage. Or Mark, I own a bunch of Airbnbs in Scottsdale as well. I basically put some money down. I borrowed some money from the bank. I bought these. They're making me money. That money that I'm making is on somebody else's money. That's also a form of positive arbitrage. And so the first thing you want to do is make sure you're getting a positive arbitrage on your own money. And then there are some people that become ninja enough at that eventually they'll feel more comfortable borrowing. Like I have a track record on thousands of homes. I have no problem. I know exactly my metrics on how to borrow money, deploy it into the market, and make money on the difference. I just borrowed $1 million actually today, and I'm borrowing it at 5%. I'm putting it in one of my vehicles producing 18%. You look at that delta, and every month I service the debt, which is positive because it makes me money. It's not a bad debt. This is not something you want to pay off. If I could, every day that I can borrow money, I will, if I can create a tangible benefit on my positive arbitrage, and I make the difference. That is just another money-making strategy. And it's a different way to think about money than the way that we've been educated, because we've been taught that debt is bad. Yeah, and the reality is that I'm trying to get into as much debt as possible. But of course, I'm not talking consumer debt and things that cost me money and boats and stuff. I'm talking about business.
Good debt that makes us money. Yeah, it's so powerful. Now, I know they're going to have to get a hold of you to get all the tips on the hottest markets, but I know of all the markets out there, you focus on less than 10. I think it's 5 even.
There's just 5 markets that I've planned.
Can you share one?
Yeah, I'll share one of them with you right now. One of my favorite markets is Florida. We lost 600,000 people out of California last year, 500,000 people out of New York last year. Half of them went to Texas, half of them went to Florida. Right now, the economic stimulus and the billions of dollars that is going into that state and where people are moving, the median income there is $80,000 a year. The average person moving there is making $132,000 a year. It's the ultimate retirement community. So if you want to know which real estate markets will be the next that boom, this is a quick tip. You look for population growth, you look for migration, and you look for economic stimulus. Then you figure out in those markets where to, the suburbs where you can buy below the median, those become the hottest markets that end up appreciating the most. And appreciation is a part of really kind of factoring that total ROI. So Florida, especially in the Ocala, Orlando area, Kissimmee, in those areas, I'm transacting a lot of real estate. And there's 4 other markets. And the reason why I do that is half of my ROI comes from the intelligence of the macroeconomics on selecting a market, rather than just saying, oh, I'm an investor, mom and pop shop, right? We'll just invest in my backyard. There are more intelligent options, and there's hands-off, like very passive options as well.
Oh, I love it. You've got your buy box freaking nailed down. And yes. I know it's a concept you teach constantly to people. Kris, you are so awesome. I love your brain. I mean, it's just so powerful, and you look good too. you know.
Oh, thanks, brother. Are you liking my cheetah shirt?
I like it. You're like totally like it's summertime, you know, you're going cash. I love it.
Yeah.
No, Kris, thanks for being here with us. We really appreciate it. I want to encourage my followers, get over to his YouTube channel and subscribe. Let's get that gold play button done. And I love
that's kind of you, Mark. I appreciate that.
And I love Kris's videos. They really are good. They've got content. They're not just fluff. So check those out.
If anyone's interested also in just trying to figure out, just get a lot of free access to a lot more real estate plays, especially if you have money in self-directed accounts and you're thinking, man, I want to figure out how to get into the real estate game. Timing is so good right now. And I have prepared a free gift for everyone. Do you mind if I share that, Mark?
Yeah, please. I know. Thank you.
Yeah. freewealthgift.com/Main Street. freewealthgift.com/Main Street. You'll find a variety. I've got one of my books that I'll send you for free on that website. I've got a free event ticket people pay $2,000 for just for Mark and you listening here. And then I also have a free consultation to take a look at partnering in real estate to help you understand what some of your real passive and hands-off real estate investment options look like.
I love it. Kris, you're awesome. Your assistant talked about possibly a free offer, and I didn't want to assume it. And so I'm so glad you took the bull by the horns. And please, folks, get over there. I'm going to, and I'm going to be working more with Kris. And our paths have been trying to cross here for years, and we're both in our lanes doing what we know best. And yeah, it's just a great combo. And Kris, thank you so much. And that's where we want them to go. freewealth.com/Main Street.
That's a lot easier than trying to spell my name. My dad spelled Kris with a K. I'm like, when I was a kid, I was like, Dad, that's awful. Now that I'm an influencer, I'm like, that's pretty cool. It's a differentiation from all the Krises in the world.
I love it. Well, we wish you the best. We hope to have you back. And thank you so much for helping so many entrepreneurs and real estate investors around the country. Main Street rocks, and Wall Street, go do whatever you want. So I appreciate it.
Thank you, everyone, for listening and watching.
Thank you.